My name is David Caldwell. I'm with Hillshire Realty Group, and today we're going to be reviewing a video from CNBC talking about the return to a normal housing market, although it's going to be bumpy, and we're going to be comparing national data to the Portland housing market.
Andy, welcome. What's your take on the latest round of data here?
Yeah, I mean, I think you covered it really well there. I mean, we absolutely saw some demand return to the market early this year when we saw rates get down closer to 6%. Very welcome news for lenders and transactional-based folks out there in the market. And it did show that underlying demand that still sits there if and when rates come down. But at the same time, sellers are backing away from the market. And so we still have these massive inventory deficits out there, and that's resulting in price hardening this spring.
What's going to happen in kind of the spring selling season? Then it originally looked like we could be off to a good start, an early start. And what now?
Yeah, I mean, you're right? So we saw demand return early, the later months in February. So we went from a 30% deficit down to a 15% deficit. We're back to a 25% deficit in terms of demand. I think what we'll see is a modest rise in transaction volumes. We're already seeing that in our collateral analytics data for the month of February.
So when we look at the Portland housing market, we have seen year-to-date, January and February, a 24% decline in pending home sales over the same time period last year. And we have to remember that 2022 also was a decline from the same time period in 2021. So we have been seeing a downward pressure, a downward cycle on demand in the early parts of the year. But when they talk about price hardening, pricing staying the same, pricing just kind of basically staying level, in the Portland metro area housing market, we've actually seen in the last 12 months, the average sales price increase by 5.4%. And a lot of that has to do with the fact that fewer homes are coming to the market. We actually were just looking at the new listings for the last 90-day period compared to pending sales in the last 90-day period. And there were only 95 fewer pending sales than new homes that were listed for sale in the Portland metro area. So although we're seeing lessened demand, we're also seeing a lot fewer homes coming to the market, which is maintaining price stability for us.
And so we're probably nearing the bottom there in terms of just overall sales volume and purchase origination volumes out there in the market, but it's going to be a slow and kind of bumpy return to normalcy. And unfortunately, I mean, for folks wanting to see prices remain high, the data is good for them right now. You're seeing kind of this stalemate out there in the market, not a return to balance, but we're not seeing anybody budge here. So low transaction volumes, hardening home prices is kind of how we see this playing out over the next few months.
It's almost like the Bitcoinization of the housing market. There's only 21 million that we're ever going to have, and everyone went and snapped one up, and everyone's just holding on to them. I mean, I don't know how you get more image. So in a market where if we go back to 2006, when prices started to drop, we overbuilt. We saw people then immediately back away. What's it going to take to get prices to turn in this market?
Yeah, and what's noticeably different about 2006 through 2012 was the Fed dropped interest rates to try to catch the market there. And so you didn't see this lock-in effect that we're seeing take place now.
True.
When he talks about the lock-in effect, we're going to put a chart on the screen that actually shows that about 85% of the mortgages that have been originated in the United States are actually now at 5% or less. What we have to consider when someone's looking at buying a new home, selling their home to go buy something new, is the interest rate they're giving up to go get into the market at a higher interest rate, and if that trade makes sense. And for a lot of people right now, they either just are unwilling to give up the lower rate or they can't afford the higher rate. And that's basically creating a stalemate with new housing inventory coming to the market.
The other thing that took place there was we had this massive wave of default activity. We had 25% of homes were mortgaged with adjustable rate loans. So they were much more volatile, and you had interest rate sensitivity, and folks were willing to sell because their rates were resetting anyway. We're running at some of the lowest levels of outstanding ARM loans we've seen in the U.S. in over 20 years. And so default activity remains extremely low. Foreclosure sales, 70% below pre-pandemic levels. New builds are very low.
If you're looking for distressed housing in terms of a homeowner defaulting, bank-owned properties in the Portland metro area, as Andy's speaking to, it pretty much does not exist.
Existing home sellers are selling their homes at a 27% lower rate in February than they traditionally do. So every potential possibility that we have for increased supply is running well below normal levels, and there's no line of sight into how that returns. The demand side there absolutely is, right? And we're seeing that in terms of when rates fall, you're seeing that demand return. But that same lever that's pushing on demand is also holding supply tight, and there's less of a line of sight in terms of how that supply side returns.
You did just give me one idea about how this, when this will all play out, which is to say when the 10-year starts dropping. So in other words, if you look at the market now, we have people pricing in pretty extreme rate cuts kind of next year. It's like the more hawkish Powell gets, the more the near term goes up and the long term rates decline. If we get into a situation next year, Andy, where all of a sudden the 10 years down 1.5 points, we're back at 2.5%, and people feel like, oh, I can move because now my new mortgage will be affordable, and I'm going to list my house now because I'm worried that prices will fall more, then I wonder if we wait a year or so out, if it's going to be a very different story.
So there's just lots of talk about home values declining, and that's just not true across the country. So if we isolate that and look at the Portland metro housing market, in 26 of the past 30 years, we've seen home price appreciation. If we averaged out the annual rate of appreciation over that 30-year period, it'd be 5.8%. And if we think about the last 30-year period, there's been dozens of years where you think housing prices would decline, but pricing has stayed stable. The question is now, with pricing going up and interest rates going up, if that will kind of remain the case in Portland. And right now what we're seeing is very few homes come to the market, and essentially the same number of homes coming to the market being absorbed by the market or being purchased, going pending on a monthly basis. So it's just a very simple supply and demand. As long as we don't have an oversupply of homes, it's going to be very difficult for actual pricing to come down.
It could be, right? And what you tend to see is the 30-year tries to project where the 10-year and where the Fed is going. And so in past rate cycles, 30-year rates peak 0 to 3 months before the 10-year before the Fed does. And so we could see, absolutely to your point, you could see 30-year rates and mortgage rates start to ease before the Fed starts to let off the brakes, though. The question is, will that move the needle for sellers? It absolutely has, and you can track demand right along with interest rates. But even when interest rates eased in January, early February, we didn't see a return of sellers to the market. And that's really where my concern is it hasn't ebbed and flowed directly with interest rates. And so there's no guarantee that sellers are willing to sell at a 5.5 or a 5% interest rate.
Oh, sure.
We'll have to see how that plays.
So we're going to put a chart on the screen that actually shows demand based on different levels of interest rates. The National Association of Realtors is predicting that in 2024, the average 30-year rate mortgage will be 5.4%. And if we go back to what we were talking about earlier, 85% of homeowners in the United States right now have a mortgage rate of 5% or less. So Andy's saying, hey, there's no guarantee if rates go down that more homes are going to come to the market. We've had a housing shortage in Portland for the better part of 10 years. We're looking at seeing rates come down at some point, but we're also talking about them coming down most likely into the 5% range. So we most likely are going to be dealing with a low housing inventory environment if you're a buyer or seller. If you're a seller, this should actually be good news, because while the market's a little bit tougher to navigate, there still are lots of home buyers in the market. The 12-month rate of appreciation is still up 5.4% in the last 12 months. Now, that's not the 16% that we saw in 2021, but if you're a buyer or seller, you shouldn't want to see that. That's too extreme. If you have any questions about getting into the housing market, if you're looking to buy a home, if you're looking to sell your home and get out of the housing market, if you want an in-depth analysis on your home, your neighborhood, your city, you can contact us at hello@hillshirerealtygroup.com. And if you want to see more videos like this one, more analysis on the market, Portland housing news, home tours, make sure to like and subscribe to our channel, and we'll see you next time.